lot of great people here, and I just wanted to say that because it's just it's an honor to be here to be a part of this group. So who am I? I'm Mike Corrigan. I'm an independent financing advisor. Some people will say broker, but I'm going to kind of tell you a little bit different in regards to a broker to a financing advisor as far as I'm concerned. Just a little background on me. I've been 30 years in the business world, started out in manufacturing. In 2000, my ex-wife moved us out here to New England, and I got into the dot-com craze. And I know there's a lot of young people here, but during that dot-com craze, it was a crazy period of time. I want to tell you two quick stories with that because it's kind of similar to a lot of people who get into commercial real estate. You kind of get fed up with the job, the W-2, and you really want to start doing something on your own. On the two dot-com jobs, some funny stories. One of them was called Knowledge Impact, and we had this web-based educational system that we sold companies. And I was heading down to Connecticut. I was halfway to my client, and I got a call by the vice president of sales. He says, "Where are you?" So I told him where I was. He says, "Great." He says, "Turn around. The company's shutting down tomorrow." So that was my first experience with that. Well, one of the guys from that company went to another dot-com. There's a company called SalesNet. Any of you familiar with Salesforce? So back in those days, we were the #1 competitor against SalesNet, or Salesforce. And at SalesNet, I was director of strategic alliances, and everything was going fast and furious, and we had a hotshot sales guy come in, and he was going to increase sales by millions of dollars each month. But come to find out, I was called into the president's office, and the legal counsel was with me. And I'm figuring it's kind of something with our contract, right? Something's got to be wrong. And they said, "Well, our burn rate went up about $3 million more than we needed to each month, so we're cutting back." So they told me the two people that are underneath me, I have to get rid of. And then the next day after we did that, guess who they got rid of? So that was my story that I said, that's enough of that. I'm going to do my own. So I went off into the financial world. I was in insurance and financial planning for a long time. And then in 2012, I got involved with a couple of partners, and we started creating a system to help business owners, mostly the baby boomer generation, which is the largest ownership of small and medium-sized businesses, work on increasing their business value and managing their wealth as they sold their businesses. It was at that time that I really started to get my first taste of financing and acquisitions. And then after that, I had a friend of mine came and he asked me to help him take a product to market. It was the first intrinsic business value acceleration program that we sold to accounting firms like BDO and RSM McGladrey. And again, I started getting really involved with these business acquisitions, and I realized what the opportunity was there, and that was kind of my story of getting into financing. And then it wasn't too long after that, my friend Jerry and I, in 2020, we decided to form a company, J&M Business Capital. This is real creative, Jerry and Mike, right? J&M Business Capital. And that's how J&M came around. I primarily do commercial real estate now. My partner Jerry does a lot of SBA work, but he also does commercial. So we both go back and forth and work off of each other very well. So just wanted to give you a little background on that. So who's on your team? There's been a lot of discussions here. Almost every time I come to these meetings, I always hear somebody talking about who's on your team. Make sure you have a good team put together. That great contractor that you can depend on. That insurance agent that you know you can call and get that insurance policy written up well. An attorney that you can rely on. But a lot of people, and like we kind of heard, don't really have a financing advisor. They're calling out and doing all the search and trying to get the bids. Well, there's a difference. And that's what I want to talk to you guys about a little bit tonight. So why? Why a financing advisor? I don't work for any one specific company. I don't work for any one specific product. I have the reach. So I network with over 50 different banks, hard money, private money, family offices. I know what's going on in the industry. I'm out at conferences. In March, I'm down at what's called the Pitbull Conference. I don't know if anybody's ever heard of that. But it's a bunch of private lenders that get together and talk about the marketplace. And so what I'm trying to say with that, as an independent advisor, I have the pulse on the industry and what's happening. I know who's saying what. I hear some of the bad stories that happen out there. I'll tell you one thing that happened with me about a week ago. There was a new lead came into me actually, and the gentleman was going to refinance a property. So come to find out, he was being quick claimed the property. He had no experience, and he was going to put about $40,000 of renovation into it and then sell it. So I was talking to him about it, and I said, well, listen, you really don't have any experience, so we got to look at some first-timer opportunities here, which is a little bit more expensive. So then he came back to me and told me that this company out in California considered the quick claim as a one experience. And I really think it was an overzealous rep that was sitting at the table giving him this deal, because what I want to tell you about is that in underwriting, when they find out that he has no experience, his terms are going to change. And this is what happens sometimes because people get sucked into opportunities, okay? There's another deal, Mario, actually, I think I talked to you about this one time. I talked to a young investor, and he had a hard money deal, 13% interest. And I was like blown away. And the guy had experience. So I was able to turn around for him at 9.5 with 12 months rather than having to do it 13. So and the reason I'm bringing this up to you is because that's what I can do, and that's what independent advisors do, independent brokers, is that they have the reach. They can go out there and do the research for you, find the best terms possible, okay, to be able to help you out. So let's see. So the what? Either one way or the other here. I gotta look at this. So the what? So I'm pretty much unlimited. And what I mean by that, by being unlimited, is that I deal with anything from 150,000 to 500 million. I even have a group that Jerry and I, my partner and I, had to go through a registration process that tests all kinds of different things. We can get up to 10 billion. So if anybody's gonna do a skyscraper, you're gonna build skyscrapers, I'll be happy to help you guys. But the point is that there's a big reach or a big diversification in regards to the opportunities out there. Again, as far as being able to work in the fix and flip world, the 1 to 4, multifamilies, new construction, major rehab, and then also we work on the SBA side. So again, not being just tied into one company, I now can go to banks and help you if you're doing a business loan or you need a working capital loan. So there's different things we can do on that. We even have equity partners out there who write checks anywhere from $1 million to $50 million when you get into larger multi-family opportunities and you need some equity partners in there. One thing that's becoming pretty big in the industry, or at least I see a lot more of this work happening, is redevelopment work, where you're taking old buildings like this and you're redeveloping them into residential units. Major, major work. And one of the things that can come out of that that a lot of people are not aware of are what's known as state and federal historical tax credits. And that's free money from the state and free money from the feds to work on your development projects. So we have actually an alliance partner in our group that specializes in this. He's an expert in this area. And then another thing, anybody know about CPACE? Okay, something you should know. In CPACE lending, it's all about putting in energy efficient product into your rehabs or your renovation. There's some major tax benefits with it. There's some great financing that goes along with it. It's usually better in a bigger development opportunity. But the point being, again, being independent, we've got all these different directions that we can go to be able to satisfy whatever that problem or complexity is with your financing or opportunities to be able to save. I put on here the how, and just really having a reliable, independent financing person can be your personal banker. There's a lot of what I call, and we had a couple gentlemen here from one of our private lenders, our hard money lenders with ABL. He was here, and I know that he would agree with this. A lot of fly-by brokers. They'll get you connected with the lending company and see you later. All they know is that they got their points on there, and we'll see you later. I think that's just the wrong way to handle things. We need to be able to help you from the beginning to the end. And that's some of the things that we work on here. So being your right-hand person in that finance event, being able to answer the questions that you have, be your liaison between you and the lender, and me being the liaison between the lender and you. And that's important because that communication stays there. There's not one client I have that I'm not on every single communication, because it's important to make sure that the I's are dotted and T's are crossed. You get down to the end and there's a problem, you've been there before, some of you, you know that it can really stink up the whole situation. I said that with very nice words. So we want to complete all the application work. I think, John knows this process. I have all the information from him and his partners. So that way, when the deal is coming together, we get the term sheet together, we get the application work done, we get the documentation done, we do all the documentation management. So what can they do? Just focus on what their deal is and not have to focus on all the research, all the paperwork, and everything else that goes along with it. So, and what I do with that is keeping your files updated, keeping your PFS updated, keeping your REO schedules updated, so that when a new lender comes into play, if we have to send that information to them, they'll have it. I can get it to them. I'm, again, acting as your advocate in an independent situation. So I want to kind of give you an example, since we talked about fix and flips tonight. I thought it would be a good idea to kind of give you a rundown of how things go. So basically in the situation, or what I do as far as service-wise goes, is that when that term sheet is finalized and we sign off on that, I begin all the application work. I get everything completed. And I have down here, DocuSign is my favorite tool. Just like John knows, I send a text, DocuSign. And that's all he knows. He goes in email, he sees the DocuSign, signs it, and we're off and running. Okay? So it's just a matter of getting things completed and off and running. Load up all your documents, your LLC documents, your bank statements, things that I know that I already have from you. Get those things taken care of. Then we close. The real important thing, I think, with fix and flips is knowing the draw process. Every lender has a different draw process when it comes to the construction side of this. And I feel it's always very important to make sure that whoever the borrowers are, we have a conference call with the lender and their draw department to make sure that everybody talks on requirements and process. Because I saw very early in my career with commercial real estate financing, I saw very early in my career where I wasn't involved with that, and all of a sudden there's problems. You told me this, that was going to happen, lenders screaming here, borrowers screaming here. So it became a part of a process that's so very important on the construction side, is to make sure that that money is transferred into your bank account as quickly as possible. And so that pre-meeting is a very important process, I think, as far as that goes. So hopefully, I've been able to kind of give you an idea of how an independent financing advisor works. It's really more of an intimate role. It's really more of a personal side of things. It's really more about knowing what you do, how you do it, and how we can best move forward with the best lenders that are out there. So, hope I covered everything you wanted me to cover.
Yeah. Any questions for Michael?
Mike,
yes.
As a newbie, what's the main thing that they should do to price you and so the relationship with, they don't sound like a jackass, or, they're, but be able to build a relationship with you for the next 20 years.
Oh.
Because they don't, one thing I think they forget is you're almost like a private banker for us.
Right.
Because you can say, hey, if Mario thinks, let's do this, this, and this. Like, no, do this, this, and this.
Yeah.
And you save millions and headaches.
Well, I think it all comes down to relationship and trust.
Right.
Okay, getting to know folks, and hopefully getting through that first process and understanding that I want people to trust in me. I'll tell you, I've had people that I've had great conversations with, and I've never heard from them again. I don't know why. I don't know what I said. I have no idea, but I think it really comes down to a trust factor. And what I also mean by that is, trust that when I say to put these things together, it's not for any other reason except that I know this lender and this is what this lender is going to want. And and I do things a lot through Dropbox so that all the secured information, everything can be loaded securely and what have you. But I really think it just comes down to just a good relationship. again, it goes back to the team. You gotta have a good team. And you gotta work well with your team, and you gotta trust in your team. So I think that's a big factor.
Okay.
Yeah, yes?
So if I came to you and I wanted to flip a property, would you finance just the purchase of the house, or would you also finance the renovations, or either or, both?
Both.
Both.
Yeah.
Okay.
Yeah,
And-
you're gonna get rehab, you're gonna get, purchase, and you're gonna get the rehab when it
Okay.
comes to fix and flip, yeah.
And
And that's
just-
typically hard money.
And the hard lender will hold the note on the home, is that how they secure their?
Yeah, so you have, that's right, you basically have, the majority of the lenders that I work on hard money are usually 12 to 18-month terms, okay? Usually, people are gonna, earliest probably 3 months getting out of a rehab and ready to sell. But it doesn't matter when you get out of it, there's no penalties really involved with hard money, so, but they're gonna do, the whole package. Yeah, and typically you're gonna have a percentage down on your loan to cost, which is, if you have a lot of experience and good credit, you're at 90%, and you're basically gonna have your rehab covered at 100%.
So if you have no experience, you're gonna have a higher rate?
Yep.
Okay,
You're higher risk,
right. Understood.
okay? So, I mean, there's people that, that you get favorable terms because of the amount of work that they do and the fact that they're turning loans. Because that's what the lender wants to see, okay? They want to see turn. So a lender with a first timer is going to look at things and say, A, if I lend to this person, can I sell the house if they fall apart? Okay? And number two, they're looking at the financials, looking at liquidity, what do you have in the bank? They're making sure they're trying to eliminate as much risk as they possibly can. But the costs are going to be a little bit higher in the beginning because it is a risk because you're our first time, situation. Once you start getting more into your belt, terms become much more favorable.
Thank you.
Yeah.
How many do you need to not be in high risk? 2, 3, 4?
Once you start getting a couple under your belt, 2 or 3 under your belt, you're looking good. Because when you see the fact that, like on your real estate schedule, when you see that you purchased, you rehab, and you sold the property, and they see that and they can verify that, they know that you have the ability to do it. And so that's what they're gonna do, because they're gonna look at those properties, and they're gonna look at your LLC, and they're gonna go through that acquisition and verify that. So once they verify, then they see that your risk level's way down, and good opportunity to build a great relationship with them, yeah. Yes?
Mike, I had a fix and flipper the other day tell me that he has to put money up first to get reimbursed for his first draw. Most of the companies that you work for, do they give you a draw at closing?
It's in some cases there's going to be a draw for soft costs, okay, that'll come up, presented. So some of the soft costs will be taken care of. The great majority of the time, it's all about the invoice and completion. Now I'll tell you what some lenders are starting to do now that I really like: virtual inspections. Okay, they're literally calling you on the phone, FaceTiming you, and you're saying, the kitchen cabinets were installed, can you show me those? Okay, and that cost was, all right, check, 24 hours, 24, 48 hours, it's wired into your bank account. So I like that, and I think more and more are happening, doing that. That's the hardest thing is to really be well managed in regards to when your completion is going and you're requesting, so that you have the inspector come out fast enough to get your money, into your bank account.
Did most of your lenders give the first draw at closing?
Cost to them, so part of that construction cost can be covered with the soft cost up front, with an invoice. They'll act it like but you can send the invoice in after you get the loan going, but usually it's complete invoice and then make the request. But again, that's the one thing, that's the important thing about having the conference call for the processing. What are your requirements? What do you need to see from me? What is the process? And then things will go a lot smoother for you.
And previously you could find a lot of contractors that would do the work and then bill you and get paid, but with the current market, a lot of contractors want to get paid half up front, they want deposit, they want to get paid quick. And so what we're finding is we're coming out of pocket for the first draw, and then we're kind of playing catch up.
Yeah.
And so, you do want to kind of count on that, because contractors today can demand the world, and you don't really have any other option.
I've been hearing that a lot, like you really wanna have reserves. Like I hear it like in all the areas.
Yeah.
And I'd say if you know, a couple of years ago, the contractor would work, understand the money's coming and get paid when the money comes. Now you kinda gotta come out of pocket for half and float it.
That's also why the lenders are looking at your accounts, making sure you have the reserves. A lot of them require reserves, 6 months reserves. They wanna see that in there, so you don't blow up. Okay.
Would you finance new construction?
New construction,
Like
land up?
Yeah.
Yeah, sure, absolutely.
Because I saw the C-phase things and the new construction, the energy credits and all.
Yeah. Yeah, usually, I had a client in Connecticut where this was a major rehab of like 3 buildings or 4 buildings on a lot. And when they put their whole construction schedule together, and when I saw what they were doing, I said, hold on a second. I sent it off to a C-PACE lender and I said, take a look at this. And the answer came back, 90% of that will be covered in C-PACE, in a C-PACE loan. So it was advantageous. Now, those take longer. There's a lot involved with it, okay? But sometimes they can be worth it, and I get them involved. The C-PACE lenders are very good at being able to talk about all the benefits and how it's paid, et cetera. So I like to have them by my side on those things because it can be pretty unique. It's a good opportunity.
So should I go to credit unions or should I come to you?
I'm sorry, say again?
Should I go to credit unions for those loans, or what is the difference? How, if I want to come to you, what is the benefit, like,
Rather than
in
a
terms of
credit.
What is the benefit of coming to me? The benefit of coming to me is because of the reach I have. I'm not just one product. I'm not just one company. I can go out and I can actually get bids. I get the quotes. Okay? I do the negotiation. If I see that a couple of guys are pretty close to each other, I'll go ahead and throw that at them. They know that I'm going to do that. They want my business. They want the borrower's business. Okay, so I do that work. All right, and that's, and I have good relationships with them. They know sometimes there's 3 or 4 hard money guys that I pit up against each other sometimes. But there's some that we build very good relationships with, that we keep things nice and steady with them because they're given favorable results, favorable terms. So, but that's really the thing. But the other thing is that typically, even with private money, hard money can be very quick, 2-3 week close. I mean, I did a hard money in a week over Christmas. That was just a complete disaster that we did flips, to make it happen. But the point is, even private money, you can get 30-year terms on private money. I mean, I did a 9 unit for 4.25 for 30 years, okay, and close it in 3 weeks compared to the credit union you're going to close in 3 months. So.
So how are you gonna get compensated? Like based on the points or like how I'm gonna if I hire you, if I come to you, how I'm gonna
Who are you paying?
Yeah.
You're paying the lender. Oh yeah, you have a contract with the lender. They're just like a bank.
And then your fees?
My fees are wrapped into the closing costs. I'm very expensive.
Okay, thank you.
Yeah. Yeah, usually, my fees are in the points. Okay? But, if I haven't earned those points, then you better tell me.
I know. And
Okay.
if I don't have you, I'm gonna spend money with somewhere else. But like,
You-
if
you-
I have you, you have better grip on what you're doing. And
Yeah.
then,
Yeah,
probably-
people that come from this group, I have agreements of what I like to do for my points and my fees.
Sure.
So.
Thank you very much.
Yeah, welcome. Yes?
Would you work with owner occupied, like 1, 2 to 4 families?
I do have some lenders that do that, yes. Not every lender will do owner occupied, but the answer is yes.
And that's gonna be a conventional loan, probably.
Not a conventional, no, you do private lending with that. Yeah, absolutely. See, that's the one thing. It's like, some of my favorite lenders won't do like the Airbnbs. They won't even get close to it. Where I have others that do nothing but specialize in that. They love it.
So, in addition to owner occupied, do you also do construction loans for
Yes.
owner occupied properties?
Yep, either heavy rehabs. I mean, we're working on a heavy rehab $3.2 million heavy rehab, and all the way from ground up new construction. Sure, absolutely. Yeah.
So Mike, for like long-term investments, it sounds like you have the capacity to help close with short-term debt financing, and then would you also help facilitate the transition into the long-term?
Absolutely.
products? I think that could be what a lot of folks may have on their radar.
Yeah. Again, I know we're talking a lot about hard money. As far as what I do, it's not just hard money. I do a lot of long-term, a lot of multifamily. You know, I mean, we got a deal in New York that we're doing for $15 million. Gosh, I can't remember now, 15 or 20 unit. I don't know. But anyhow, so the answer is yes. We do long-term. We can go from, if you're going to flip that house and go into a rent, yes.
Yeah.
Yeah, absolutely. Just did that tonight. Guy in Connecticut. Yeah. And the other thing is that, you know, personally, I go all over the country. My partner's out of North Carolina. We do all up and down the East Coast, but I've got projects going all over the country, and I've got lenders. I've got a lender in California. We closed a deal in Rhode Island. Okay. And then I had one of my Boston private lenders help me with a deal out in Chicago. I mean, you know, just kind of whatever the objective is to or the strategy is for that investor. So, okay.
All right, thank you,
Thank you.
Michael.
Appreciate it.